Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phil Mackintosh, chief economist at Nasdaq, to discuss if inflation is picking up faster than expected and if data is pointing to a potential downturn in housing demand, if that's on the horizon. Phil, let's start with the latest on COVID-19 vaccination progress, which is contributing to what we're seeing in housing and inflation.
Yeah, you kind of know that we're getting close to the end of COVID when all of the economic notes that I used to get every single day are now going to weekly or closing down altogether. And so you can see in the data, it's a good wrap. We've got a lot better caseloads now than basically we had last summer. Obviously, the data from back in last March is distorted on the testing front because we didn't have testing in place. But you can see from the deaths that we had a lot more COVID than tested. But either way, where we are is now definitely on the backside of COVID. Looking at the map of risk levels in the whole of the US, it's gone orange, which is great because it was pretty close to purple not that long ago, pretty much across the country. And so we've gone from purple to red to orange. We're starting to get yellow. There's more than 50% of Americans with a vaccination now, and you can definitely see that's having an impact.
And Phil, of course, the next question is this recovery too high?
That is the big question. Yeah, that is the big question, isn't it? And so we've already seen a lot of the, demand side pressures on employment where people are starting to book services, book holidays, book restaurants, and those businesses are actually having trouble getting their staff to come back. Whether that's because the benefits are still too good, or whether it's because they're mothers or they've already got kids that can't go back to school yet, and they're kind of a little bit of a bottleneck on everything going back to normal. But you can see that's filtering through into inflation. And we've been talking about commodity inflation. We've been talking about input prices for producers, but you're starting to see the expectations of inflation now spike up as well. And so compared to, in the chart we're looking at today, a 20-year history, the latest data point shows inflation expectations literally off the chart.
And let's talk about housing now. Prices for new and previously owned U.S. homes are surging, as is reflected in the data. Walk us through that.
Speaking of inflation. Yeah, I mean, if you haven't noticed, a lot of people wanted to move to the suburbs, and the data definitely showed that the ratio of, the prices of buying versus renting is actually more expensive for owners than in the middle of just before the credit crisis. So sort of 15 years ago. So the cost of owning a home now has actually gone up, and it's gone up pretty significantly compared to renting. But why is that happening? And what's happening next is kind of interesting, because if you look at some of the more forward-looking indicators, we've seen for a couple of months now that the number of people applying for mortgages has actually been falling. And so, based on that, you'd think that the demand for housing might actually be going down. One of the things people point to is potentially there's no people applying for mortgages because there's no houses to buy, because supply is definitely in short supply. But if it's not, if people are actually pivoting from buying a house and getting mortgages to booking their holidays and going on a vacation, then we might actually not have a continued bubble in housing. And some of the forward-looking data, looking at consumers in a survey who plan to buy a house in the next 6 months, that number's fallen pretty precipitously as well. So it might actually be, to your point earlier, the consumers are all getting back to spending old-fashioned ways.
Good. Well, let's hope so. And I hope my furniture gets delivered if no one is buying houses at this point. Phil, great to see you as always. Thanks for the insight. And thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.